Welcome, everybody. Hello and welcome to everybody. This is Jeremiah Demaray, founder of Advisorist. And with me is our special guest today, Jeff Nabers. Welcome, everybody. We want to do a little sound and audio check first, just to make sure that you guys can interact with us. And we want this to be really engaging for you all. We are live streaming on LinkedIn, YouTube, Facebook, and of course, right here inside Zoom. So if you're here with us in Zoom, do us a favor. You're going to see two ways to communicate. There's a chat feature, which is disabled. So you don't need to put anything in the chat box. Don't worry about that. But hover over to the Q&A section right there, the Q&A section, and just say hello and tell us where you're dialing in from. We want to make sure you can see and hear us okay. And in just a moment, Jeff's going to be bringing up his screen for the class today. So we got Roy, who's checking in, Curdy from Calgary. We've got Nora from Stafford, Virginia, Lester from Houston, Greg's checking in from Montreal. We got Moishe from Brooklyn. All right, we got a hi y'all from Elle, who's in Texas. That's great. Sabina from Haymarket, Carrie from Orange County. Beautiful. All right, good to see all you guys here. Welcome. And for those of you who are engaging with us via LinkedIn, Facebook, or YouTube, please go ahead and leave us a comment there. We have some of our staff standing by to help moderate. We had, hundreds of people sign up for today's class, so we're counting on a lot of interaction and engagement. And just based on all of the news that's been going on, a quick stat, maybe you guys picked this up today, but crypto mainstreamification has officially happened. 14% of the US population now invests in cryptocurrency, which is unbelievable. And American crypto owners could double this year alone. This year, Bitcoin has doubled in value, and Ethereum is up 400%. 2/3 of adults who don't own crypto are at least crypto curious. So for those of you that are financial advisors or in the financial profession and you're leaning in, you're definitely in the right place, and we want to congratulate you because you guys absolutely get it. The very fact that you're here shows us that you're in the right place and you're the type of people that will really benefit from today's class. So let me tell you a little bit about our guest today. So Jeff, actually my good friend and our fellow colleague here and our exclusive coach on cryptocurrency. He retired in his 20s after selling his mortgage and real estate businesses after being able to short the stock market after the 2008 bubble hit. After studying economics and trends, he began investing in Bitcoin right around 2013 and founded one of the first crypto hedge funds in 2017. His wealth management firm, because he's also an RIA, is the first to integrate publicly traded securities, crypto, and physical precious metals and private investments into an integrated wealth management solution and portal. And Jeff shares the same passion as we do at Advisorist, which is to help advisors double their business and give them back 100 days a year. And with our collaboration with Jeff, our mission is to bring the crypto conversation back into the forefront for this industry so that it's something that you know what to do for your clients, but more than that, you know what to do for yourself, and you can get the answers at work. Jeff, I know you got a great class planned for us today, and I'm going to pass it off to you now.
Awesome. Thanks so much for that intro. Great to see you guys from all over the country, all over the world, including Mumbai, India, I see there, and Canada and all of that. That's really great. I'm going to go ahead and share my screen. All right. So you should be able to see that. You guys see like a full screen crypto asset asset fireside chat there?
Yep, looks great.
Okay, awesome. So first thing from the attorneys, this isn't investment advice, even though I'm an investment advisor. This is education, all right? So we're here and it's easy to get people to show up for a crypto webinar now because it has really gained, as Jeremiah was saying, that mainstream attention. Largely because you don't really see a lot of assets like this where you can say that $1,000 that you put in 2009 has become worth $6.875 billion with a B, literally. And this is something there are people who have done this, turned thousands of dollars into billions of dollars. That's a 687 million% return. Also unheard of in any other asset class. Annualized, a lot of the best money managers in the world, they can barely get into the double digits annualized. They can't usually get over 20%. That's 258% annualized. So something's obviously going on here, but with such big gains, obviously the questions that come up naturally are, is this a bubble? Is this like Beanie Babies and tulips and the dot-com bubble? Is it too late? Can I still get in? What coins are a good investment? There are so many coins. How do I choose them? Where do I buy them? What price should I buy? Now, these questions have been solved, as you're going to see today, but there's a bigger story. Before that, Jeremiah touched a little bit on my bio. I'll give you a quick personal history because the way that I got into crypto is a little bit strange. Now, I'm a consultant advisor to high net worth individuals and other RIAs. I'm based out of Scottsdale, Arizona, but we're a virtual and digital practice too, as we have clients in all 50 states and in about a dozen countries. I did retire early at age 27. I later came out on a mission. You guys are part of that mission here today. And I'm the founder of Nabers Wealth and of Solo 401k. At Solo 401k, we're the leading self-directed IRA and 401k provider since 2003. Now, all that sounds really great, but admittedly, it really wasn't that long ago that I was actually waiting tables at the Olive Garden, no joke, getting people the salad, soup, and breadsticks for $2.13 per hour. You're supposed to make a lot more in tips. I wasn't that good. So for me, it was about the $2.13 per hour mainly. One day I met a guy who was wealthy, young, successful, and not a doctor or lawyer. So it really stood out to me as like, wow, I didn't know this was possible. And he got me on track to believe in myself, to find resources, and to attain a goal of what he called freedom level wealth. He got me into the mortgage business, and I started investing in real estate. That's when I really upgraded my identity as an investor to an investor. So that kind of really started me off on this track as an investor to my investment themes. In 2003, I spun off and created my own mortgage business and built a real estate portfolio. In 2006, I saw a crisis on the horizon, so I was a little bit early. Better to be too early than too late with major trends, but I was a little bit early, and I sold my mortgage business and I sold all of my investment properties. I then was hunkered down in precious metals, gold and silver, and even shorted stocks leading up to the 2008 crash. After that was when I, attained what was kind of like something I never thought would be possible, is I retired. You've probably seen that movie, The Big Short, and some of my friends call me the Little Short because what you saw Christian Bale's character did up in New York, he had this big hedge fund and he shorted the market because he kind of saw where things were going. I was like a microscopic version of that, just doing that with my own money in my own little house in Myrtle Beach, South Carolina. And since then, once I was able to retire, I met my now wife, Rachel, and we've been able to go all around the world because of the thematic investments that that has provided that. Some of our favorite places that we've been to, we like to go skiing and snowboarding in Colorado. We have friends in Switzerland, Mexico, Italy, Brazil. We like riding our dirt bikes here in the desert in Arizona, and sailing in the British Virgin Islands. And that's really using the kind of information that I'm sharing with you today. Now, when I came out of retirement, it was shortly after I decided to buy Bitcoin and move some of my gold allocation to Bitcoin at about $70 Bitcoin. Then I realized that we're now in the biggest wealth transfer in all of human history. It's happening right now. So I decided I wanted to help investors and their advisors to take advantage of this, to understand what's going on, right? So like all the clues are all out there on the internet and stories that we see, but what really unlocks the potential is to assemble that into the story that's meaningful, where you get the insights. And as Jeremiah mentioned, I started one of the earliest crypto hedge funds as well. So that's my backstory of what happens when you have the right resources. Now onto the bigger story. Bigger story is what's happening right now. You've got big money and you've got small money. And I've got a lot of information to cover, so I'm going to kind of keep it pretty snappy. We will have some opportunities to cover questions as well. So big money is private. Most of the people that manage and have big money, you've never heard their name, contrary to kind of the whole like Forbes 500 type of culture and all of that. Most big money is very private. They have these family offices. You've never seen their face, but they control most of the money. Because of that, when big money moves, the world changes big time. And normally you never get a chance to get ahead of big money, but right now you actually have a rare opportunity. This is because big money is just getting started into crypto assets, into getting into them. Of course, we know why. They're hungry for higher risk adjusted returns. They want to outpace inflation. They want to get the returns that they can no longer reasonably expect to be getting from stocks and bonds. So the crypto markets have grown more just from 2020 to date than the S&P 500 has grown since 1994 to date. So this is a really big deal. Even just look at 2020 forward, crypto markets as a global total market cap are up 1,027%, while the S&P 500 is up 28.6%. Really big difference. Big money has done their research. They know that cryptos have a limited supply. They know there's a growing demand for wires that are faster and cheaper. They know that people want 24/7 access to their money. They know that there's a growing distaste for banks, and people kind of want to just cut them out at this point. And they know what happens when any asset has a cap supply and the demand grows. They also know that we are extremely early by the most important big picture metrics. Even though you see a lot of these headlines, as Jeremiah was alluding to earlier, we're still in the early stage of the early adopters. Things get really into swing when the majority is involved. We're nowhere even close to the majority yet. Big money knows this, and they've studied the technology. They know that crypto networks cannot be shut down. So they've decided to invest. Lucky for you, there is a lag. Now, when big money controls significant wealth, that's great, but they also, when they change directions, it takes time. They move slowly. There's committees to convince. There's board meetings to have, and there's internal battles to get through. So this presents an opportunity for you to get positioned ahead of big money so that you can seek profit from being ahead of them and riding that wave. So the question then becomes, what will happen to crypto prices when the next wave of big money starts pouring in? Interestingly enough, I've been teaching a version of this webinar for 8 years. And if we go back to 2018, that's when I really started pointing out to people what's going on with big money getting into crypto. So I want to show you actually the exact slides of what I told people 3 years ago when they were on a webinar with me, similar to today. I said, the Bitcoin market cap is at $180 billion. The Bitcoin price is at about $10,000. Big money controls $139 trillion. So by the time $1 trillion goes into Bitcoin, the market cap will be over $1 trillion, and the Bitcoin price will be about $60,000. And I said, I don't know how long it's going to take for $1 trillion to go into Bitcoin, but I believe it's just a matter of time. All right, so back to 2021. How did that age? Pretty well, right? So I said, we're going to get to this $1.1 trillion market cap. And when we get there, Bitcoin price is going to be $66,000. We're at this $1.1 trillion market cap, just a little lower than the figure that I had said in 2018. And here we are, just like clockwork, $59,451. Okay, the next milestone, once again, to pay attention to, is actually when Bitcoin gets on parity with gold. In other words, the gold market cap is around $11 trillion globally. When Bitcoin matches that, and I think it will surpass that, we know what the supply of Bitcoin is, so we actually know exactly what the price will be once Bitcoin becomes just as big as gold already is today. And that is a Bitcoin price of $510,000. So going back to one of those earlier questions, are we too late? Is there still opportunity? There is so much opportunity. And I think from a risk-adjusted return, the opportunity is better than it was before because the risks are now lower. And by the way, anybody can buy a tiny fraction of a Bitcoin. You don't have to buy a whole one. Okay, so that $510,000 trajectory, look at the line with the red and green candles, and then look at the dotted green line. How reasonable does that dotted green line look to you? And if you're looking at this chart, let me point something out. This is different than the charts that all the people who are constantly missing the opportunity on TV or watching TV are looking at, because we use a logarithmic chart, which reveals the true trends with Bitcoin. And we zoom out to either 1 week or 1 month candles so we can see the whole picture. When you see the whole picture, you can see the forest. Now, the forest here is showing that to get to $510,000 Bitcoin is only a tiny amount of actual percentage growth compared to the growth that we've already had that really did happen. So I think this is a reasonable trajectory. Now, talking about prices, right? When it comes to where crypto prices are headed, let's have a little reality check. Here's what you need to know. It doesn't really matter what you think. It doesn't really matter what people on TV think. It doesn't really matter what your friends think. It only matters what big money does, right? Actions speak louder than words. And the actions in the crypto market are really lining up here. Big money has done their research. They want to get in. So how can you get in before them? Well, there are 6 steps. Let's take a little breather here. Hopefully you guys are starting to see just the magnitude. If you'll type into the Q&A, and if you're interested, if you're excited about seeing the steps on how you can do this, just type steps into the chat or the Q&A. Steps with exclamation points. I didn't even ask for the exclamation points. And you guys, of course, added them in. Somebody wants SIEPs, but I think that's probably a typo. Steps, a lot of exclamation points. Okay. Steps with extra S's at the end. Awesome. Thanks, Kevin, Richard. Okay. All right. You guys are clearly in it to win it. So there are 6 steps, and let's just go ahead and get right into them. All right. These are the steps to get ahead of the big money and to intelligently construct your crypto portfolio. Now, I know a lot of you are already thinking about the well-being of your clients. And what we want to really do, everything that when I'm working with advisors and groups like this, everything we want to do is a lot like when we're on an airplane and they tell you, look, if the oxygen mask pops down, put yours on first, secure yours, then help those around you. In crypto, this is even more true because you can't really help others around you if you haven't learned a certain amount, and learning a certain amount requires direct experience. So what I encourage you to do is to get that direct experience, the direct experience that the person on CNBC yapping about things doesn't have, right? You can just skip right past that, get that direct experience. These are the 6 steps to put your oxygen mask on first. Number 1, get off of 0. 0 is a dangerous number. 0 is what most people have as an allocation to crypto, and specifically you want to start with Bitcoin. So starting with Bitcoin, if you have a 0% allocation in your own portfolio to Bitcoin, that's actually extremely risky at this juncture. And so you want to get off 0 and just get some Bitcoin. Now here, just any amount, $5, $100. We don't have to do any calculus here, or or cure cancer or any, get some Bitcoin as soon as you can, just some amount, so that you, all of a sudden what's going to happen is you activate what's called your reticular activating system in your brain. You'll start paying attention to it, and then all of a sudden it starts to become integrated in your model of the world. Okay, after you get off 0, you want to make a strategic plan. This is what almost everybody on the internet forgets to do. That strategic plan is going to be your guide. It's going to be like your North Star. Then you're going to establish tax favored structures. Who here is a little bit freaked out about these crazy proposals about capital gains taxes, right? So it's not enough to make really big winning investments. You have to have a strategy for keeping that. And no, it's not greedy to keep most of your gains. You can only give through philanthropy what you have, right? And I don't know about you, I feel like if I can give money directly to something, it's probably going to end up doing more benefit than if it goes through all of the bureaucracy and corruption out there, right? So minimize our taxes, choose your counterparties, who are you working with, who are your partners in this journey, and then allocate and diversify. That's when you really take everything about that strategic plan and put it to work and take intelligent action. From that point, markets are always changing, so you really need a system to monitor, manage, and evolve. All right, so those are the 6 steps. Have a great day. Thanks for joining me. All right, you probably want to know a little bit more. Okay, there was some
Well, Jeff,
exclamation
I
points.
wanted to jump back to step number 1, because this might seem basic to people who are already into Bitcoin, and it's really exciting. Some of the comments here, Ryan, he's like, I am so sold, I'm ready to join a cult. Can you give us a small grain of salt to think on? So Ryan, like, you're definitely in the right place here. But Jeff, can somebody get into Bitcoin without paying the $55,000, $60,000 price for one Bitcoin? Could you just like break that down for a second? Because I think that's still a conversation that a lot of people are asking themselves is, do I need 60K to buy one Bitcoin? Can I buy smaller amounts?
Yeah, so like $1 is divisible by 2 decimal points. That's called a penny. A Bitcoin is divisible by 8 decimal points, which is called a Satoshi. So you can buy as little as 1/100 millionth of a Bitcoin. So yeah, you can start with, Bitcoin has a lower barrier to entry than even penny stocks do. So yeah, anybody can put any amount of money into Bitcoin. So that step 1, get off of 0, you can just do that with any amount. You don't have to buy a whole Bitcoin. In fact, in the future, becoming a Bitcoin is going to be like being a multimillionaire. And what's going to happen is society is going to shift into that smaller unit of Bitcoin, which is Satoshis. So Satoshis are just the more like what will become the more common usable version of a Bitcoin. It's just a fraction of a Bitcoin. All right, y'all ready for some details? Let's drill in a little bit with the time that we have here on what each of these 6 steps really entails. So first off, when you get off of 0, you just need to start by opening an account at an exchange or a custodian somewhere, like Coinbase is one. I'll tell you more about others later. You just open an account, you upload your driver's license to verify your ID, you connect your bank account, move some money into that new exchange account, and you just buy some Bitcoin. A small amount, just you don't have to do your big whole order of everything you want to put in there. This is just to be in the get off of 0 club. Secondly, your strategic plan is like that North Star guiding you, right? So you want to establish these guiding parameters. Number 1, what's your investment objective? Number 2, what's your risk tolerance? Now here, we want to really focus in on the tail risks that most people don't ever talk about. Then what's your exit strategy? In other words, what's your time horizon? How long are you holding this? And what is the end game financially here? What's your tax strategy, right? There are different ways you can set your Bitcoin up to be taxed and your other crypto assets. Then when it comes to constructing your portfolio, you start with asset selection. There are thousands of crypto assets. You don't want all of them. In fact, you don't want most of them. You have to really pick the diamonds out of the rough and select which assets you're to acquire. And once you know what you're going to acquire, then it's a matter of how much are you going to allocate to each? What are those position sizes going to be? And what's really important with Bitcoin, because it's an asset that's natively digital, which means that it literally exists out there in the digital sphere, you have some operational security. And for most people, as things have become more and more digital, their operational security is lagging. So you want to play catch up on that. So we're talking about how to secure your connection to the internet and how to secure the devices that you're using to connect to the internet. Now that step 3 is establish tax favored structures. There are several there. The main ones are self-directed IRA or self-directed solo 401k accounts. I'm going to give you an example here in the case of a self-directed IRA LLC. So this is the most powerful type of IRA. What you do is you have a special type of IRA formed a special type of LLC formed, and then you open a bank account in the name of that LLC. You open an exchange account in the name of that LLC. And then you just do a multi-step flow of funds from the old IRA to the new IRA, then to the new LLC bank account, then to the LLC exchange account, and then that's where you can acquire the crypto. So when you do that, then the gains, depending on whether that's Roth or traditional, the gains, no matter if you turn $1,000 into $1 billion, to any level, the gains are either tax deferred, where they're going to grow without getting chopped off every year in taxes, or in the case of a Roth, they're tax free, which is very powerful. All right, step 4, you're choosing your counterparties. Okay, so you got your exchanges and custodians, you've got your brokers, your advisors, and your hardware wallet providers. So drilling down a little bit into more detail here, exchanges are like Coinbase that we mentioned. You've probably heard a lot of them because they're going public. Kraken is another major one, as well as Gemini, Bittrex, and Binance. So these are all, what you might consider to be tier 1 custodians or exchanges. All right, and then you've got your brokers. So in this case, if you ever have larger orders, you don't want price slippage where you're bidding your own orders up and costing yourself money. So whenever you have larger orders, you really want to be able to buy from dark pools or over-the-counter desks. These are where your orders don't end up on the order books of exchanges, and so they don't really move the price as much. So if you ever, for yourself or other people, are acquiring large amounts of crypto assets, then you'll want to work with an OTC desk. Then when you're figuring out, who's guiding me here as an advisor, even advisors need advisors, especially with crypto assets. You want to ask how many years of experience does this person have with crypto assets? How deep is their domain expertise here in this crypto domain? This is largely an economic event that's happening. So what is this advisor's track record with economic forecasting? And post-COVID, so very important, how good is their digital service platform? Everybody needs a digital service platform now. Then hardware wallet providers, you've got Trezor. It's the easiest to use and best overall. So this is basically like, I forgot to get them out of my safe and show you, but you can just imagine I have my prop of a Trezor here. So Trezors are the easiest to use. It's like a little device that plugs in a USB, and it can be, when used properly, a very secure way to hold some of your own crypto without relying on any custodians.
Hey, Jeff, if you like, I got mine handy. I'm just going to hold this up to the screen here, but this is what it looks like, folks. This is a Trezor right here.
Right, exactly. So that little thing in the box there, you can hold for your own safekeeping, and inside that can hold the keys to any amount of crypto. So you've also got the Ledger, which is another very similar one. It's a great device, but there are some concerns around their information security, as their database of customer information was hacked a year or so ago, including names and addresses. So that's, I'd say, a tarnish on Ledger's reputation. KeepKey is another one that's a good choice. And for very high-tech people, there's one called Cold Card. But there's more of a learning curve to that you probably wouldn't want to go through with valuable assets if you're not a total nerd already. Okay, so step 5, allocate and diversify. Now we want to diversify across 4 crypto categories. We want to diversify across exchanges, custodians, and brokers, so that we don't have all of our eggs into one counterparty basket. And we want to diversify across the various 6 tax structures. So for example, the 4 crypto categories that we're talking about here are: number 1, digital hard money. This is Bitcoin. Bitcoin has won this category. There is no other crypto asset that is in the digital hard money category that hasn't already lost to Bitcoin. Now, why are there several thousand crypto assets? Well, it's because almost all of them are not trying to be digital hard money. They're trying to be smart contract networks, such as Ethereum. This is basically designed to be like a platform on which more sophisticated financial instruments can be built. Then those sophisticated financial instruments that have started to work and started to get traction and started to have billions of dollars flow through them are often called DeFi, or decentralized finance. So this is where new protocols, new infrastructure, new applications are built on top of the smart contract networks, right? So if you want to be diversified in crypto, with each asset, you have to understand, what category does this fit in? How can I be diversified across the categories? And the fourth crypto category that gets the most attention from the media is the speculative mania assets. These are oftentimes scams or just pump and dump schemes. This is where, when people criticize crypto overall for being like Beanie Babies or tulips, they're right. They're right for this category. There is a category of crypto Beanie Babies, basically. And I don't have any experience with them. I haven't really made any money from them. You have a massive chance of loss in them, and you also could get in trouble with the law because of the pump and dump schemes that are illegal. So for me, you actually don't want to truly diversify across 4 crypto categories. If I have any impact on you, I would encourage you to stick to the first 3. And as you diversify and allocate, you're using your guidance from your North Star, your strategic crypto plan. All right, now you want to also be diversified across the 6 tax structure. So you've got your taxable accounts. And then if you use an IRA LLC, you may have one that's traditional and tax deferred. You may have one that's Roth and tax free. If you qualify, you can use a solo 401k, and that can have a traditional and a Roth all in one plan, in addition to an advanced strategy called Mega Backdoor Roth. I don't know who named it. It sounds pretty cool. Mega Backdoor Roth. But that's where you can end up putting very large amounts of money in a Roth very aggressively. Step 6, again, this is really key because, you know, there's a saying that in crypto, every week a year goes by because it's so eventful. Things are happening so fast in crypto. They change rapidly. If you snooze on this, like I'll give you actually an interesting story. There's this billionaire named Mike Novogratz, and he is so if you don't pay attention to what's going on in crypto, you can either get very lucky. It can either be very good luck or very bad luck. Mike Novogratz bought Ethereum, and then he went to, I think it was India or somewhere. He went to one of those places where he went into a cave and meditated for like a year. And when he came out, he was a billionaire, and he had made like $500 million just on his Ethereum position. So he was really lucky. There's a lot of other people who go, not pay attention to crypto for a year, and they come back and their crypto's down 95% because they're not following what's really going on, right? So you want to monitor, manage, and evolve your portfolio. So you got to choose your data sources wisely. A lot of noise out there. You need to filter. You need to get down to the signal, get the noise to be quiet. You need to regularly review those high signal to noise ratio sources of data. Adjust your strategy when needed. That's small changes. And evolve when the theme shifts. That's big changes. So for example, just to give you an idea of what this can look like, our desired outcome is to have a diversified portfolio constructed of assets with a favorable asymmetric risk reward. That means the upside is far bigger than the downside. So we make some of these bets, and the odds are in our favor. It's like we're the house, right? So here's, for example, the top 5 assets that I've been teaching about and consulting on for many years. And I started talking about DeFi in early 2018. So there was a really big inflection point in DeFi, or decentralized finance, in July of 2020. And that's when I took my clients and members of my groups that I consult and sort of my inner circle, and I said, listen, you've got Bitcoin, you've got Ethereum, but you also have something called Yearn Finance. So these are 2 coins that I've done a lot of research on that I'm bringing onto your radar. Okay, these are freebies for you here. YFI Yearn Finance in 2020, right when it started, I was alerting my inner circle to it. Same thing with Aave, which is originally called Lind. Since then, if we look at this if we look at how these assets have done, you've got on that bottom, that yellow line is the S&P 500. It's gone up by 30% since July 18th, 2020. Bitcoin has gone up by 544%. Yearn has gone up by 760%. So we're under a year we're talking here. Aave has gone up by 987%. And Ethereum has gone up by 1,590%. So these are assets that you might want to include in a portfolio that you construct. So if I give you an example of what a portfolio like that might look like, let's imagine that at that time, July 18th, 2020, you set up a portfolio, you used my guidance, and let's say you put 75% into Bitcoin, 15% into Ethereum, and the remainder into a basket of DeFi assets. So let's say it was 5 different, let's say you put 2% in Yearn, 2% in Aave, and then the remaining 6% in some other coins. Okay, so now let's imagine that those other DeFi coins completely lost all of your money and failed and went to zero, right? So we want to really grok this asymmetric risk reward. That means that some coins you could lose out 100%, but the most you could lose is 100%. With what remains that succeeds, you can gain a lot more than 100%. So then depending on your probability weightings, this can be very favorable. So for example, that starting out Bitcoin allocation of 7,500 has become worth 47,000. That starting allocation of $1,500 into ETH has become 23,000. That 200 in Yearn became 1,900, 200 in Aave became 1,900. So our $10,000 portfolio, like if you could literally go back in time, get on my webinars about a year ago, follow these 6 steps, you might have a portfolio that looks a lot like this, and you could have started with say 10,000, and that'd be worth 116,000, and we're still early. That's how powerful these 6 steps can be when executed properly. So now we've had a peek at the opportunity. A second here, let me see if I can get some. Okay, I thought I had some notes on that, but anyways, so you had to look at the opportunity. Let's look at the dangers. At this point, you should probably be pretty excited about the opportunity. And so what a lot of people do is they go, great, and then they just start funneling money into crypto without the 6 steps. But the 6 steps are designed to help protect you against the dangers, okay? Danger number 1, we've all heard about it, hackers, and there's a specific type of hacking called phishing that you need to watch out for. You've seen all these stories. Bitcoin exchanges have gone bust from being hacked. Second, this one exchange shut down after being hacked twice. The original major global exchange called Mt. Gox had a $460 million disaster. In today's Bitcoin price, is actually billions, multi-billions. So you've got hackers. Hackers are always trying to go after the honeypot of anywhere where cryptos are stored. Phishing is even sneakier. This is phishing with a PH. Phishing is even sneakier. Take a look at this. One of these logins to Coinbase is the real login to the real Coinbase. The other one is a fake login put out by a phishing attempt from a hacker, where if you log into it, you've just lost all of the crypto in your Coinbase account. So that is why phishing is such a big problem, because if you just are looking at the website, you're gonna lose your coins. Okay, phishing attacks on Bitcoin wallets, as the price goes higher, the hacking and phishing attempts go higher and higher. You've seen Fortune talk about phishing for Bitcoin. Again, when Bitcoin price was just getting up originally a few years ago, phishing attacks are on the rise. So the more the prices go up, the more the hacking and phishing goes up. So the dangers with regard to hackers and phishers increases the more successful the investment is. Okay. Danger number two is a lot of people will just go, well, then just hold all of your Bitcoin yourself. That means that you're holding your keys. Your keys are kind of like a password, but they work differently. And if you're holding your own keys, the biggest danger is that you will lose them. You can have them written down on a piece of paper, but if your house burns down, the paper's gone, your keys are gone, and so is your crypto. Here's an example that this man in the UK, I believe, accidentally threw away his Bitcoin wallet into the trash, and later that Bitcoin became worth $108 million. Here's another guy, this Australian tech expert, throwing away one computer part cost him $4.8 million. And again, this is from a few years ago, so I think that's probably hundreds of millions of dollars now. Also, out of the 21 million total Bitcoin supply that will ever exist, already 4 million Bitcoins are currently lost forever, according to a study into that topic. And then here's a guy who he threw away his computer that had Bitcoin on it. It became worth hundreds of millions of dollars, and the government won't let him go into the dump to try to find the computer. This is a computer worth at this point probably billions, and nobody is allowed to search for it. Again, nearly a quarter of the world's Bitcoins may be lost forever. Over tens of billions of dollars are lost and will never be found. So you actually can lose your keys. You got to get beyond the sound bites of CNBC into real research and understand this is a real risk. Danger number three has to do with asset selection mistakes. So great example here. You remember the .com boom and bust, right? During that boom, you had like pets.com, you had amazon.com. You really couldn't tell the difference. One went on to become bankrupt and worth nothing. The other went on to become this juggernaut of retail. And we're social animals. We like to follow crowds. We get comfort by being in a sort of herd, especially with regards to thinking. And when you ever have innovation, that means that you're very susceptible to following other people right into bubbles. We've had bubbles with something called Bitcoin Cash, which is not Bitcoin, back in 2017. There's one called Ripple. I blogged about it and made videos about it, that it would become an unregistered security and the SEC would go after it. That did happen. This year, Dogecoin is the latest one. When you're doing your coin selection, this is one of those mania speculative bubble coins. And then a counterexample here is with Ethereum. Ethereum started out and then it kind of split in two. And in that case, actually, the new one did actually become the more successful one. So coin selection, you have to know how to select those coins. That's why it's part of the 6 steps. And then danger number 3, in my opinion, by far the biggest danger is the unknowns. I always draw people's attention to these 3 circles. This green circle represents what you know that you know. The orange circle is like when you ask questions here on today's webinar, that comes from the orange circle, your zone of inquiry. You can only ask questions about things that you don't know about. The huge danger is the danger zone of the red circle. With crypto, it's the majority. It's what you don't know that you don't know. These are questions that you don't even know how to formulate, that you're not even thinking of, but they can still hurt you. Okay, it's the most elusive danger. So many people are in do-it-yourself mode. You can look things up on YouTube, Google, forums. Do not do that with cryptocurrencies. I'm not saying never watch a YouTube video. I'm saying this isn't actionable information. You have to close the gap and go beyond just looking at things online. Okay. With crypto assets, it's very different than like fixing your lawnmower. Okay. Most people publishing videos on YouTube or writing blogs or talking on TV, chatting in forums or groups, most of them didn't even know what cryptocurrencies were until a few months before you. But they're usually a couple weeks ahead of you. And they say one thing that sounds impressive, and next thing you know, you follow them, you could be following them right off a cliff. They have their own danger zone of their unknown unknowns. And so it's really a situation of the blind leading the blind. A lot of Johnny come latelys out there in crypto every time the prices go up. you got to watch out for do-it-yourself mode. It's a frontier industry. There's a lot of misconceptions and mythology. Even people on TV don't know what they're talking about. And the industry is changing week to week. Best practices can change. Stay away from do-it-yourself mode. One single mistake could wipe out your entire portfolio, even if it's worth hundreds of millions of dollars. So think about this for a moment. Do you think that guy who had 7,500 Bitcoins that he lost, do you think he wanted to, and I need to update these values, do you think he wanted to throw away hundreds of millions or billions of dollars? Was that his intent? No, that's where intent doesn't matter, okay? The danger zone doesn't care about intent. You have these high stakes, you can lose a lot of money because of the unknown unknowns. Do you think the people that fell victim to the phishing scams intentionally signed in to not the real Coinbase site? Of course not, okay? They just didn't know what they didn't know. We all have this danger zone. Going it alone is super dangerous because nothing's there to protect you from the danger zone. Things are changing quickly. There's nothing you can do by yourself in do-it-yourself mode to defend against an unknown danger. All right, so let's review, okay? You know big money is moving into crypto. You've seen that when the gates open, cryptos are positioned to soar even higher than they have so far. You've learned the action steps that you can take. You see how you can position yourself ahead of the big money for asymmetric risk-reward exposure. That's what we want. You know you have to avoid the hackers, the fishers, the speculative mania assets, the unknowns, and going it alone. By now, you're probably wondering, how can I get the guidance, support, and resources to have the competence and confidence to capture the opportunity in a smart, risk-managed way? How can I have the competence and confidence to implement these steps? Okay. You could definitely go off and take these 6 steps and open 100 browser tabs and do that. I've warned you against that. Those of you who are doing that, you're probably already gone. For everybody else, let's talk about how we can actually help you do that. The answer to how you can have the competence and confidence with this is the Advisorist Crypto Mastermind. This is something that Jeremiah has been asking me to do for a really long time, and he finally convinced me because it aligns well with my mission. This is where I'll plug you into my personal crypto investment process that I've painstakingly developed over the past 8 years. Now, we're going to cover what you get as a member and how this membership pays for itself. So it's a 6-week program. We have 6 weeks of mentorship in building your crypto asset portfolio, guiding you through the steps. Devil's always in the details, so we'll handle those details along with you, where you get full access to all my resources, counterparty recommendations, introductions, and each of these 6 weeks, we have an online briefing where you get new information and you work on assimilating that information. And then before implementing it, you want to get those questions answered on our live and interactive Q&A video conference. So week 1, remember, we're starting with get off zero. So you start small, you get your fraction of a Bitcoin. We're going to guide you through the practical steps of where to buy, where to store, and some tricks you can use to skip the line. You know, some of these exchanges, it takes 6 weeks alone just to open an account, and that wouldn't be very helpful to you. So we have some ways to accelerate your account openings. All right. After we go through the information, which is on an online membership site, all you have to do is have access to the internet, and you're going to be able to be just fine. All right. Then we have our Q&A video conference. There's a couple options on how you can make the most of this. Number 1, which works with any schedule, is you just pre-submit your questions by the day before the Q&A. Okay. Then we'll record the Q&A session, and you'll be able to watch or listen to it. You'll be able to hear your question getting answered, right? So that helps you expand your zone of knowledge from your zone of inquiry. You'll also be able to hear other people ask questions that you didn't even think of. And that's what protects you against the danger zone, protects you against that big red circle, okay? Now, for those of you who it just happens to work out with the schedule, you do have the option to attend the Q&As live. You can still pre-submit your questions, but you'll also have a chance to ask questions live as well. For any of these, all you need is an internet connected device. You don't need to be on camera or anything, just a phone, a laptop, anything. Now, remember those 3 circles. Each week, the briefing materials are going to grow the green circle, your zone of knowledge and competence. You're going to ask questions from your zone of inquiry, the orange circle. And you're going to hear questions other people ask that you didn't know about. That's the red circle. And you're going to be growing your green circle. So that's week 1. Week 2, we get right into that strategic plan. We cover the 3 investment objectives and how to select which one you want to focus on. And then the different ways to measure your risk tolerance. You can throw away all your risk tolerance questionnaires that you have from your advisor shop because they don't have anything to do with the digital era that we're now in. All right, it's time to update the way that we think about risk. We're going to do that together. And then the 3 exit strategies. A lot of people get into cryptos without any exit strategy. And then all of a sudden, how can you have a successful exit strategy when you don't even have one? You can't. So you have to know what it is. You have to choose that wisely. We're going to talk about the 3 different ones, the pros and cons of each. We're going to talk about the 4 tax strategies, pros and cons of each. And then we're going to go into a deep dive on the 4 crypto asset categories. I'm going to show you my 7 specialized elements of crypto asset due diligence. This really helps you with your asset selection and your asset allocation, as well as there are 3 pillars of your operational security that you have to get right to keep yourself, your family, and your holdings safe. At the end of week 2, of course, we have that Q&A video conference, and your green circle is growing. Week 3, we get into the tax favored structures. This is where you set up a self-directed IRA LLC. Now with us, because we pioneered these tax structures decades ago, you're actually going to get one of these complimentary. All you have to do is pay the third-party filing fees, which is only a couple $100. But our normal fee for setting these up, most firms that try to compete with us on this charge thousands of dollars. You're going to get that complimentary as part of this group. You can do a traditional IRA LLC, a Roth IRA LLC, or one of each. You're going to get one complimentary. If you need the other one, then we'll give you at a big discount. For those who qualify, the self-directed solo 401k is hands down the most powerful tax structure that you have access to. Okay, same thing there. One of these structures, you're going to get complimentary. So if you qualify for the solo 401k, we'll set that up totally for free. And actually, there are no third-party registration fees on that. And the solo 401k is really like 4 accounts in one. So for those who qualify, it's like having a traditional, a Roth, a spouse traditional, and a spouse Roth all in one retirement account. Super powerful. We're going to go through all the ins and outs. I'm going to bring some of my team members into that week who can educate you on these specialized tax structures. And the setup that we do includes all the documents, registrations, entity formations, registered agents, guides, tutorials, everything that you need to be able to get this set up and learn how to use it. And then you'll also learn about how to open accounts in the names of these structures with various providers. We have our Q&A video conference, and your green circle continues to grow. Week 4, we get into counterparties. We're going to review the pros and cons of the various counterparties. We're going to drill down on each of the exchanges and custodians, as well as give you white glove introductions to other private institutions that have special benefits, such as faster servicing. Brokers and OTC desks, if you need to do large orders, we'll introduce you there. And we'll review what we have in development right now, which is our sub-advisor cooperation program with Nabers Wealth. This is if you just wanted to plug right into my RIA to set your portfolio up using the full suite of tools and everything there. We're working on a sub-advisory agreement for that. We'll also dig into the hardware wallets, show you exactly how to use them, where to buy them and where not to buy them. This is important. If you just go Google them and buy them from wherever, you could actually lose all of your crypto. How to buy them. Now, normally people will be like, okay, I'll just pay for it with a credit card, ship it to my house. No, don't do either of those. I'll show you what you should do, how to set it up, how to transfer your crypto assets onto your wallet, how to securely store your wallet itself, as well as the seed phrases. We do our Q&A conference, and your green circle is growing. Week 5, allocate, diversify. This is where we use your strategic plan as a guide to allocate across those crypto categories and across the brokers, custodians, hardware wallets, and professional storage services across the tax favored vehicles. So this is where everything that we've gone through is really starting to, we're implementing piece by piece every single one of those. I'll also show you when to use crypto hedge funds for yourself and for your clients. There are 4 levels of legal qualification that we'll discuss. We'll have our Q&A, and your green circle continues to grow. So as you're going through this, you're going to notice, I want to make it so that every week you are increasing your sophistication as an investor and an advisor. That's what we mean by that green circle growing. And then week 6, your system for monitoring, managing, and evolving. I'm going to show you advanced milestones to monitor the progress of the continued crypto revolution. I'll show you 3 asset classes to watch closely to gauge the growth of crypto asset markets, and how to apply your personal investor learnings to your advisory practice to benefit your clients. And then how to use that to grow your advisory practice. Anybody want to do that? All right, so the Q&A, we do that, and your green circle is getting enormous. Look at that green circle. Okay, so this is really a full-blown financial and wealth transformation in just 6 weeks. So think about, what is this worth to you? Think about what it would have been worth to you to build that strategic portfolio a year ago that we talked about, or 8 years ago for the earliest of my inner circle. We're still early. The advantages to being in my inner circle are continuing to accrue. So if we look at the value, obviously the real value is in the performance of the investments and what that does for you and your family and your future, and for your clients and their families and their future. Okay, that's into the, depending on yourself and your portfolio and your client book and all that, that's into the hundreds of millions to billions of dollars. But another way to look at the value is just kind of like, hey, what's this going to cost you? Well, normally I've done 6-week mentorship programs before. The price is usually $12,000. People happily pay it, and they love the benefits they're getting from it. The Q&A itself, if we look at the hourly rate on that, my hourly rate, I'm just normally not available because I only have so much time. But when I do charge for my time, it's at $1,000 an hour. So those 6 weeks of mentorship, I would project to be about 9 hours of Q&A at a minimum, 9,000 there. Entity formation, if we're forming multiple entities and you're taking advantage of the one complimentary one and the discounted ones, that would average around $2,000. The business mentorship, should be a P there, mentorship. I have done some business mentorship before. It's always involved at least $8,000 up front. Being part of a community of like-minded advisors, that's priceless, right? So you will probably already know most advisors out there, they're going extinct, right? So you're here because you want to stay ahead of the curve. You want to adapt to the digital era, and being around a community of other advisors, it does so much for you. That's priceless. What about skipping the 10,000 hours it takes to really develop the expertise here, right? I mean, you could skip it and just kind of wing it, but you'd probably make some very expensive mistakes, or you could try to develop all of this all on your own. And by the time you'd get there, Bitcoin would probably already be worth $5 million. And then you'd be like, finally, I can do Jeff's 6 steps, but you'd have a much worse entry point. So grand total there, if I was really pricing this similar to the way that I've priced past programs and had happy clients at those prices, it would be about a $31,000 package. And I can honestly say that if you guys bought a $31,000 package to get done what we're doing with this group, it would be 100% worth it. But the reason that I'm doing it isn't for money. The reason I charge money is just to make sure that you're committed and that you're valuing your own time too. So we're going to do this for only one payment of $29.95. When I talked to Jeremiah about this, he was just like, dude, you really need to charge at least $5,000 for this. And I just told him, look, we need to make this a no-brainer. I don't want price to be an issue for anybody who wants to get this done. So think about it this way. 5 years ago, let's say you were in my inner circle, and all you did was buy Bitcoin and ETH with $10,000 each. That would have turned into $39 million. These are the facts. These are the real price movements that have happened. And 5 years ago, this is the exact thing that my inner circle was doing. And this is the exact level of results that they have gotten. Now, you might think you could never do anything like that. Maybe the numbers aren't that big, but I still think we're less than 20% through the growth of this market. We're probably close to 10%. So where could you and your clients be sitting 5 years from today by just like these others, following their footsteps and getting into my inner circle, right? So these are the 6 weeks. That's the value proposition. That's the massive discount to make this a no-brainer. And for anybody who has any kind of hesitation about, look, I want to do this, but I don't know about this program, I'll just take the risk and say, if you don't like it within the next 30 days, join within the first 30 days. Any reason, don't have to explain yourself, just email to cancel, we'll give you all your money back. I've given that offer for my crypto coaching. I've never had anybody take it, but I'll give it to you anyways, just so you know the risk is on me. I stand behind this program 100%. That's why I don't have a problem doing that. Okay, so Jeremiah, if you have a link for one of the registration pages, you can put that in the chat. I want to open things up for Q&A. It looks like we have tons of them. So go ahead and put your questions in the question area. And Jeremiah, let me know what questions you want to choose that would be most valuable for the group.
Absolutely. By the way, we're getting lots of questions. I just posted it in the chat. So you should see inside Zoom right now, the little chat bubble would have turned orange. If you just click on where it's orange and then the domain, it's very simple. It's secure.advisorist.com/crypto. Jeff, is it possible for you to just click on the link since you've got your screen open? Could you just show them the page? I just want, or I can do it on mine, your call.
Yeah. Let me,
okay.
My little Zoom thing is hiding. Do you want to give me the URL? Advisorist.
Yep. secure.advisorist.com/crypto. And by the way, for those of you that know that you're in already, we're going to do something really cool. Just put the words "I'm in the Q&A right now. Go ahead and do that. I'm also going to give a gift of a treasure. So one of these is going to get sent to you for one of the people who joins today. We're just doing that as something fun, just to reward people who want to take action. This sells for $350. So we're going to be sending that to one fortunate person today. If you're in, just go ahead and put "I'm in," and then head over to this page. Thanks, Jeff. That's perfect. So that's how simple it is. All you want to do to get activated is just put your basic contact information, your business name as well, and then what method of payment we could use. If you guys want to use credit card, you can do that. Or if you want to do PayPal, you need to click on the PayPal button. And then from there, it'll bring you the login. So Jeff, if you can click the PayPal button right there where it says, yeah, and then it'll ask you to log in. And then you could do that. For those that are in the US, if you're, if for some reason, you know, whether it's the single payment of $29.95 or it's the 3-pay, we have a 3-pay option, which is 3 payments of just $1,100. So that's $1,100 today, $1,100 in 30 days, and then $1,130 days after that. PayPal does have a financing option with 0 down, 0% financing for 6 months. If you qualify, you just fill in the little form there and they'll let you know. Wow, we got a lot of people. Nora's in, Neil's in, Irma's in, Leslie in. Beautiful. That's great. All right, guys, we got a lot of folks coming in. Tibby's in. Beautiful. There was a question about Canada. We got a lot of Canadians, and as a fellow Canadian, I'm happy to see so many of my fellow compatriots there are interested in crypto. Does this work in Canada?
Yes.
I'll say that we have a lot of members that are already from Canada that are in and are having really good success. But Jeff, you want to just explain why it works in Canada? And maybe at the same time, we can hit up, Shakar is asking, will it help in India as well?
Sure. Yeah, really globally, you're going to be able to take advantage of this because there are international exchanges and there are Canada specific exchanges that we cover in the program as well. And the one area where you might not be able to benefit as much is really just the tax favored structures are mostly US specific, but the tax strategies, while the tax favored structures involved in the various tax strategies might not apply to you in India or in Canada if you're not a US citizen, some of the tax strategies still do apply to you. So that's kind of, full disclosure. If you can't have an IRA or a 401k, then you can't have an IRA or 401k. But frankly, If you're not a US citizen, then you're probably in a better taxable situation in the first place.
Yeah, great question. Another one, Neil's asking, when does the 6-week program begin?
Next week.
Good stuff. So all of you that are saying I'm in, make sure that you complete your order before we hop off today. That's really, really important. Nora's saying thanks so much. She's really excited. Let's see. Jeff is saying, I'm an insurance agent, so I don't have assets under management. Is this program appropriate for an individual investor? Great question, Jeff. Love that one.
Yeah, definitely. So you have to have some sort of financial licensure in order to meet the sophistication requirements that our compliance department requires. But it doesn't have to be an AUM type of business. Like if you don't have a Series 6 or 7 or 65 or 63, that's okay. Even if you're just insurance licensed, which I know it's a lot easier license to get, then you can get into the program with that. You just have to have some sort of financial professional licensure.
Yeah. So basically, if you have a license, you're good, Jeff. You don't need to be an RIA. And I'm really excited for people like Jeff. You probably represent half the people here. You have a license and you're actually thinking about this for yourself, which is what I told Jeff in our private conversations. And I'll just be very open with everybody here. I met Jeff over a year ago, and I was exactly where a lot of you are today. I knew nothing about crypto. All I knew is Bitcoin, and I had seen all the noise. But hearing Jeff and how he explains stuff in such a simple way, and he broke it down, and the clarity, and free of any hype or rhetoric. He's like the only guy who talks about crypto without taking a picture of himself in front of a Lamborghini or something. And everything he has data, and a track record. And I personally got in, and I am so grateful to. I think the other day Jeff said, "Hey, would you mind just sending me like a video about what you thought of working with me?" I'm like, dude, I was already going to do that, because I was just so amazed at what following these simple techniques. And I only got a part of what you guys are getting. So I said, Jeff, we have to do this so that people can participate, because I want to see the entire industry help themselves so that they know how to help others. So I love that question, Jeff, and you're definitely at the right time, my friend. So good for you. Brandon's in, that's great. Alan's asking for a quick explanation. He says, can you briefly expand on the sub-advisory model you're working on and the vision for it going forward?
Yeah, exactly. So the sub-advisory model is really one where at Nabers Wealth, I've really got two paths to open this up to get it to everyone that needs it. The one path is just to become an enormous advisory firm and have millions of clients. That to me seems like a huge headache, and it also just kind of leaves all the other advisors in the dust. So that's not really the path that I'm excited about. The path that I'm excited about is kind of using my RIA firm as a guinea pig and as a proving grounds for all of the systems and methods that it takes both to do a good job in managing assets that involve traditional assets and crypto assets, but also how to harness this as an opportunity to grow a business. Per hours of like prospecting and lead generating and selling, I've never seen any firm bring in AUM as productively as we have with just our small little bits of, we just have a very long waiting list right now. And so all those methods, both operationally and in terms of growth, marketing and sales, we're really looking to use that sub-advisory relationship to just kind of plug you right in to our software, to our technology. And the way that we're going to do it is we'll have a small monthly fee just to basically cover the technological seats in our software, which have a cost to us. And then we will just share some sort of basis points fee. I think we'll just be looking to kind of test it out at a level that makes sense. I don't know exactly what that will be yet. I'm hoping that we have the first few sub-advisory contracts green-lighted by our compliance department in June. So I'm trying to move really rapidly with this, and we have been working on it for 4 months already. So Yeah, we definitely want to have that available before like a Bitcoin ETF or before Schwab flips the switch on or any of that, because while those are going to be good for the industry, what's going to be really good for you as an advisor and good for your clients is a solution that is built for your benefit and your client's benefit, not just a little switch that makes a good headline for like Schwab or whoever. So that's as much as I can expand upon it. We're really just trying to make it like turnkey so that you can basically just plug into my whole system rather than spend 8 years building it. On the advisory front, everything that you need, I think, to put your oxygen mask, that's what this course is about. Beyond that, those of you who want to then use that to service your clients, probably the sub-advisory approach will be the fastest and easiest way for you.
Jeff, can you do me a quick favor? Because this goes with Brandon. Can you switch on your screen, click it back to credit card? And because somebody was asking Brandon, how does he do the 3Pay? So well, that's funny. I can see the 3Pay on my screen, but I can't see it on yours. Could you hit refresh, Jeff, for a second?
Yeah, let's see. Oh, there you go.
There you go. Okay.
Bam.
So yeah, if you're trying to do the 3Pay, if you look on Jeff's screen right now, right there where he's hovering, you can just select that and then you choose your payment option credit card. So Brandon, hopefully that'll help you guys out. Remember that in order for you guys to be qualified to win that treasure and also to be in the program, you can't just do I'm in, you have to actually place the order. I know somebody was asking that earlier. So yeah, make sure we're not going to call you after this. We're not chasing anybody down. This is such tremendous value. If you guys want to do this, you want to do this now. So you just go ahead and go to that link. I'll put it one more time in the chat too. And for all of you that have said I'm in, make sure that you go to secure.advisorist.com/crypto. I'll put that there in the answering the Q&A. And then this way you make sure that you do that. Okay, Brandon, he says he's got it. All right, that's good. Glad you got that. All right, this is related to Canada. But Anonymous is asking, how do we get around compliance on this in Canada? And actually, that's a great question too for the US. Like, where does compliance play in this and where doesn't it play into it in terms of building your own wealth, doing this for yourself, Jeff?
Yeah, so doing it for yourself, this is something where if you work at a large firm, you have to disclose to your compliance officer, let him know that you're doing it. And, if you're at a really great firm, they're probably just going to say, okay, and they're going to put it in a file cabinet and then compliance complete. If you're at a firm that is less great, then they might say you can't do it, or they might, and I don't really know why they would do that, but talk to your compliance officer about that. I think the path to and this isn't crypto specific, this is all investment specific, right? So like, I am my own chief compliance officer at Nabers Wealth, and so I have to file a document with myself and be like, hey, is this okay? Yes, okay, great, and stick it in the file cabinet every time I make any investment that's out there in the private market. So that's kind of the path, at least in the US. It's really beyond the scope to get into the nitty gritty of all the compliance in Canada. But most likely, I mean, almost all countries, especially Canada, just kind of like copy and paste what the US does for the most part. And then, yeah, basically you just talk to your compliance officer. You usually just have to fill out a disclosure form.
Yeah, excellent. Alan, he says, thank you. That's fantastic. I was hoping to hear that. I'd be interested in learning more about the program, looking to position my practice for the next 10 years. I think big changes are coming. Great, Alan. So just to be clear, Alan, there is no other way to learn more about the program. In case you guys are wondering, this is the program. Ask Jeff anything you want to hear. Ask myself here. We have other advisors that are in the program that are doing really well. They've gotten clarity on their positions. They've taken their assets out of the dangerous places and put them into the smarter places per the training. And they're only in week 2 already. So if you guys are wondering, once we close the class today, that's it. So make sure that you guys get in by going to secure.advisorist.com/crypto. I'm going to go ahead and Alan, just for you, I'm going to type that answer in there for you so that you can go ahead and click that link. but we don't do follow-up calls. Here's a couple other follow-up question. Trey's asking, do other coins using the ETH network count towards your ETH allocation?
No, actually, so a lot of times you'll hear people try to come up with clear ways to communicate. A lot of times you'll hear the coins that are built on top of ETH exclusively talked about like a token. So you've got that, like that's a token and ETH is a coin. So each token has its own token economics. So even if, built on ETH, that means they use the ERC20 protocol to create the coin, and so that it runs on the Ethereum network, but it has its own completely separate supply, its own completely separate use case, its own completely separate demand, potentially its own protocol and application. So they're totally separate. The only thing that counts as an allocation towards ETH is ETH.
Great, appreciate that.
And by the way, I think you'd get a lot out of, if we go back to the weeks here, really getting into the week on Allocate and Diversify, where we are getting into the asset selection there. And then of course, once you select your assets, allocating to them. So like, okay, how much ETH, might you want to have with your risk tolerance and that sort of thing, so that I can guide you through how to make those decisions using my 6 steps.
Here's another one from a different anonymous, or maybe the same anonymous person, we don't know. What is your opinion on Cardano?
Yeah, Cardano is one that I wouldn't say is like a standout. Like if you go order of importance, it starts with Bitcoin. Bitcoin has the best expected risk-adjusted return because it has the lowest risk of failing and going to zero. Other networks like Cardano, which is a symbol ADA, compared to Bitcoin, for example, and even compared to Ethereum, has a much higher chance of failing. And so, like, remember, this is a new security model. I mean, crypto's been around forever. Cryptography is what secures our nuclear weapons and makes sure that our enemies don't just like send them off, right? So cryptography has been around for a long time. Cryptography being used to secure a cryptocurrency, that was brand new in 2009. Some of these other networks, they were brand new, maybe like 2017, right? So if you go back to like Bitcoin, say in like 2012, like it was really risky. Maybe its potential return was enormous, but its potential risk was enormous too. Now it's really de-risked. So one of the things that is my goal for you going through this 6-week program is to kind of step up a level of investor sophistication, to go beyond thinking about, here are the coins, are they good or bad, and to go into thinking about like what's the upside, what's the downside, what's the probabilities of success, what's the probabilities of failure, where you can literally type those into a spreadsheet that I give you, so that it creates then an allocation plan or suggestion. And so Cardano, I think, deserves a place in there, but it's a very small piece. If you had $10,000 going into Bitcoin, you might want something like $100 going into Cardano, but not that much more compared to Bitcoin.
As we're wrapping up here, some folks are asking about crypto ETFs. Like, would that be the same as buying crypto? Should I just do a crypto ETF? Paulina's asked that, and a few others have as well.
Crypto ETFs could serve a role potentially in your practice, but as an investor, there's no replacement for the real thing. The reason for that is because Bitcoin's biggest value add is it's its own security model where it runs itself. And somebody else was asking about, well, couldn't the government just shut all this down? No, if they could have, they would have. Actually, that's the big technological breakthrough. This is kind of like a new We the People Declaration of Independence software, where this is an alternative to central banks. Nothing that any politician can shut this down. And if a study of the last 100 years is any indication, the governments can say things about crypto, but they can't do things about crypto. They can say you shouldn't have it, but they did that with drugs, and more people took drugs as a result. So I'm not trying to say that the crypto is like drugs, but I am trying to say that people they do what they want. Where the laws intersect right now, it's very dangerous. The biggest thing the government could do to kill crypto would be to create hard money or sound money, go back to a gold standard. But they're not going to do that. So basically, it was nothing but tailwinds from crypto for the most part. I think I lost the thread of the original question. What was it, Jeremiah?
Crypto ETFs versus
yeah.
just buying
So
it.
If you have the crypto and it is already has more uptime than the NSA servers and the FBI servers, and it has never been hacked, whereas the NSA and FBI servers have. So you've got this like layer of security. You've got this 100% uptime. No computer network has ever had. So there's nothing that any company or organization could do to improve upon that. And then you layer on sort of like, we have structural problems, I would say, in the securities markets. We saw they had to turn off trading on GameStop a couple months ago, right? So we have these structural problems, and they're due to that system being built before computers. Well, Bitcoin was built after computers, so it has an advantage of a fully digital architecture. To then layer on an extra layer of risk that somebody might turn off trading at the very moment that you would want to buy or sell the asset, to me, it just doesn't make a lot of sense. I think it's good that it gives more people access to crypto, but I think the sophisticated investor that I want you to become, the highest level every year, I want you to become even more sophisticated. Then the real thing is what you want.
Yeah, great breakdown. Carrie's asking, can you buy all 4 types of crypto, coin, DeFi, et cetera, on one exchange like Coinbase, or are there different exchanges for each type? Great question.
Yeah, most exchanges you can buy all the types. Now down to the exact coins and tokens, it varies from one exchange to another. And then, a big part of like the security here is you normally don't want to keep it on the exchange that you bought it. So you want to think of it as like, have you ever gone to a foreign country and you go to the foreign currency exchange and you give them dollars, and if you're in Brazil, they give you reais. Well, you don't just leave the reais in their hand and then walk off and say, oh, hey, I'll hit you up anytime I want, to go out to eat. You take those reais and then you take them with you, right? So you want to think of exchanges usually as like that. They're just an exchange. They're just trading one thing for another. But once they trade it, then you want to take that and then secure it. And that's a really big part of that strategic plan that we cover in week 2 is how to figure out where you're going to securely store them after the fact. But yeah, you could get by with just one exchange that you're working with, but you still want to then securely store it separately.
Great breakdown. Let's see. Ryan's asking, by the way, folks, some of you are asking about the 3-pay versus the 1-pay. So do you get less, or do we throttle content or anything like that? No. So whether you come in today at the 1-pay or you come in at the 3-pay because you rather save a little more money to put into Bitcoin, great. We don't like hold back anything from the first month or the second or anything like that. You get full access just like you would normally would. You're just extending your payment options out. So hopefully that helps you out. Carrie was asking about the link here in LinkedIn. So for you, Carrie, we just went ahead and posted that. Again, if you want to jump in, they're your last chance. You go to secure.advisors.com/crypto. We're going to wrap this up here in just a few minutes, but secure.advisors.com/crypto. So as a recap, you're going to get the 6 weeks of coaching. It's an on-demand members area, as well as the live coaching you're going to get every day. As long as you have access to the internet, you'll be able to interact. And the other thing too, Jeff, I think we should highlight is in between the live sessions with you, we have a dynamic members area where you're in there every single day helping members out, break through their questions and their obstacles. So if you guys have a question or you hear something, and the other day somebody posted something that was kind of funny. One of the sharks said something about Bitcoin, and then they got all excited because it sounded different than what you said. And then you gave like 4 authoritative articles as to why Kevin O'Leary was totally off on whatever he said. And here was all the data and evidence. That's the kind of interaction Jeff will give you every single day in the members area. That's another thing that you get access, private community that's not distracting like Facebook. You're just going to be there and you can interact and ask Jeff anything you want about your portfolio. So I thought that's a huge advantage. The other question that just came in, Kerry says, thank you for that. That's good. Ryan, this is about the mining process. He wants to know, how do you feel about mining? Would it be worthwhile to invest in personal equipment or a mining company? And we're referring to Bitcoin mining.
Sure. In my opinion, no. What happened is the opportunity with Bitcoin mining was many, many years ago, where it was as a really great opportunity. But then it became very competitive and people started to invest hundreds of millions of dollars into the mining equipment itself. And it just kind of became an equipment race where, like, realistically, to get into mining, you most likely need to invest millions of dollars into equipment. And then in order to still get the block rewards, in other words, to get Bitcoin mined, then you need to be part of a mining pool. And the economics of it are somewhat favorable so Bitcoin goes through 4-year cycles. They're somewhat favorable if you're set up before the cycle resets. The cycle reset on May 12th, 2020. So by the time you would get your capital allocated, it's just basically a whole other set of risks. It involves the need to invest a much larger amount of money. It's much more complicated. You definitely need some deeply technical people involved, then they could potentially kind of screw you over. So it's a lot more risks and a lot more investment for not necessarily an improvement in reward at all. Yeah, it's kind of an industrial thing now, like, so yeah.
Yeah, thank you for that. It's not like what they just make it on TV where someone's in their garage and they just have a rack of servers and they're like, I got 75 Bitcoin now.
Yeah, it was like that. That was
that.
Many years ago, and it's not the case anymore. That was one of my biggest, regrets, really, is I had a really powerful video editing computer, like a 18-core Mac Pro back in 2011. Wow. And I was like, I'm going to use this to mine Bitcoin. And then I was looking at this, is too complicated. It's probably never going to be worth anything. So if I would have done that, the coins that were mined would probably be worth over $1 billion today.
Wow. Anonymous is asking, are the sessions taped or recorded in case you can't make it? Absolutely. Like every session that we do, that's one of the benefits why we structured it. If you can't make the live session, you send your question in advance. Jeff will answer it. And then we put that back into the member community within about 24 to 48 hours. So you can go back and you can watch, you can listen to it at 2x speed. So you can blast right through it if you wish and go and get straight your question, plus hear what other people are talking about. So that sphere of knowing what you don't know starts to grow, and then knowing what you know grows as well. That green circle we discussed as well. And very good. So we handled Ryan's question. Looks like we're about ready to wrap this thing up here. Let me see if there's any. All right. Anonymous is asking, why self-directed? Why would you use self-directed to purchase Bitcoin? Great question.
Yeah. So number one, you've got kind of like these series of like walled gardens, right? So for example, you could go open the Robinhood app and buy Bitcoin there, but you can never withdraw it. So you actually don't know if they're really holding the Bitcoin for you. And the same thing might be the case with the ETFs. So there's just a lot of shenanigans that can occur if you have too many middlemen that aren't adding value. So when you have an intermediary, they're either a value add or they're what's called a rent seeker. A rent seeker is just like, back in the real estate business, there's all kinds of people just trying to make introductions and that's it, and just make some fees for that. And so, like in Bitcoin, you really want to be able to move it where you want to move it and trade it for what you want to trade it for. And all of that requires that you need to be in an open ecosystem. The reason that the internet is so successful is because it's open and it's decentralized, right? So like if you go to China, they don't have the real internet, right? So they can't Google things, they can't look on YouTube, right? So you've got the internet, and then you've got like the Chinese pretend internet. Then with retirement accounts, a self-directed retirement account is one that has an open architecture, an open ecosystem. It's allowed to invest in anything that's legally allowable. Whereas a kind of brokerage-based retirement account is sort of like the Chinese internet. It's really only able to point towards investments that the broker house wants to point towards. And there's just other restrictions where everything that a retirement account can do by law, most of them are watered down and restricted and tied down. It's not really what you really want when you want to be able to be adaptable and flexible and roll with all the economic punches here in the digital era. So you want to have that self-directed account. You want to be able to have the keys to your crypto for some of it, and you need to be in that open ecosystem. Just like only the open internet created the mass value that led to Facebooks and Googles and Amazons, only an open crypto ecosystem will give you access to all those things. So I'll give you a real hard example to take away from this. There's a few different ways you could have had some sort of IRA that could have Bitcoin somewhere a year ago. But a year ago, when I told my inner circle, look at this Yearn Finance. This is a really valuable network. I think that they might succeed. Yearn was about $3,000 per coin. And then it became worth $50,000 per coin before you could even access it on exchanges or in any retirement accounts. But our inner circle had their self-directed retirement accounts, and they had their trainings that we showed them how to use them, and they were able to access Yearn. So if you're trying to be an early adopter, you have to really adopt the technology itself, and all the other ways that you could get Bitcoin in a retirement account are sort of watered down Chinese internet style.
Awesome. Well, listen, everybody, thank you so much for being part of today's special class. Excellent questions coming in. And we definitely want to say a big welcome to all of you that joined us inside the mastermind. You guys are in for a treat, and you can start asking questions as early as this afternoon. Your logins will have been shot to your inboxes literally within a few minutes. And for those of you that still haven't decided yet, this is your last chance. We're going to close it down. secure.advisors.com/crypto. I just posted it as the reply to all the people who said I'm in. Make sure that you've done that as well so that you can be entered in for the treasure. And then I've also posted it into the chat. If you guys make sure that look in the little chat bubble, it should pop up orange. And for those of you on LinkedIn Live, I did post that there, Carrie, so you should be able to get in just fine. Listen, everybody, we're really grateful for all of you today. Congratulations to all of you that stepped up. And if you're interested in, continuing your education with us in this, just keep following us on LinkedIn, join our Facebook group. We are here to serve the advisor community. Jeff, as always, thank you so much for sharing some of your wisdom and just giving us the lay of the land and answering so many questions today. We're really grateful.
Thank you. My pleasure.